All right, what's up, YouTube? Happy Friday. Here to answer some questions. And I'm going to share my screen. I've got a lot of great information that will, let's see here, that you'll be interested in hearing. So, in the chat and drop a comment so I can make sure that I'm really live. It's my third live. Appreciate you guys signing in. Go ahead and drop in the chat. You guys here? All right, well, we're going to get started then. So, look, here's the thing. The equities market is starting to crack these last 2 weeks, and it's going to really impact the real estate market when this does happen. Of course, we don't know when it will happen exactly, but we will have some sort of crack in the market that will likely pull the housing market down quite a bit. So, obviously, if you're a buyer, and I was just talking to a guy who works in new construction and sales, and he's even thinking about buying himself, and he's thinking about pausing it because we understand that the long-term trajectory of real estate has so many hurdles that it has to overcome. The crappy credit quality of borrowers today, the fact that we have this affordability crisis, the fact we need prices to come down, the fact that the government's trying to come up with any sort of plan to overcome those type of issues. It's driving people into a spot where they feel like they're going to get the rug pulled out of them immediately after they buy, which is completely possible in an area like Florida that is dynamic and is known for its boom bust periods. So the prediction that I have is that something will happen maybe in the bond market, but when the equities start to crack, and this is really important, it'll impact the housing market. And we see this every single time that equities start to fall, the number of contracts stop. And this is more so today than any other time period in history because of the age of the average home buyer in the United States. It is so old relative to history, much older, that their portfolios kind of determine on like how they feel sentiment wise about the entire market. So it's really, really important. So how are we looking to buy? This is a question. Con ZE, what's up? Thanks for the comment. How are we looking to buy in Q2, Q3 in 2026? The crash is starting. So we're already in a correction in Florida, right? So correction is down 10%. A crash is 30%. I do think that we will see a crash here in Florida based on the amount of supply that I'm seeing coming on. The builders are making really interesting decisions right now, and the amount of distress we're already starting to see while we're seeing all-time highs on basically every single asset classes. Of course, AI stocks over the last 2 weeks have just, crumbled, some of them off 20 to 30%. The stock market's down just a tiny bit. It feels like a lot, right? So I do think that if you're buying next year, I don't actually think it's probably too early. See, real estate isn't a liquid asset. It takes time for the asset class to correct back to reality, right? So we all are aware we're in a bubble, right? We're in a bubble in real estate and in stocks, but it takes time for it to correct. Stocks are much more quickly to react, obviously, and we can go down 30% within a couple of weeks. And that's how it usually goes, right? There's something that shows up in the economy that really freaks people out. Then you lose the sentiment in the housing market even more so than people are already feeling. So let's dig into the data, right? So look, there's a generational divide. The median age of the US home buyer, this chart is bananas, okay? And this comes from the National Association of Realtors. The first time home buyer is 40 years old, up from 30 years old, just a couple of decades ago. So people are putting off buying a house, they're putting off getting married, they're putting off having kids. Now, if you look at the age of all buyers, it's 59 years old. Now, to be a boomer older is 61 years old. So I'm just going to say boomers, right? So boomers are basically trading houses back and forth to each other. And it's the same boomers that were buying, 2 decades ago that are buying today, because that used to be 39 years old. Now it's 59 years old. And the problem with this is that the majority of their wealth at this age are in stocks or in their real estate. So if you see one of those go down, it's going to impact the other one significantly. And typically they do trend line together where you see stocks correct. That's an influence on the sentiment. And then that leads to them just taking their foot off the pedal and not being able to purchase, right? If somebody's 401k drops 30%, it's very unlikely that they're going to, at all-time high prices, go out and purchase a piece of real estate in a very unaffordable type of a format, because a lot of the boomers right now, if they purchased 20 years ago, they refinanced in 2020, 2021, they got a really low rate, and they don't want to give up that low rate to move to their next house. And this is creating this lock-in effect. That's why we're seeing the velocity of home sales really start to slow down quite significantly. And I think we could actually see a little bit more of a decline in the number of home sales as we see buyers drop off, as the sentiment continues to sour. So the boomers hold, this chart's crazy, 72.2% of all equities owned by individuals. Okay. So boomers and older, I should say. So that's this dark gray here and this maroon color here. If you add those together, that's 72.2%. The rest of their money that they have is often tied up in the real estate assets that they've purchased. Maybe they bought an extra house that they rent out, or they have a vacation home or something like this. So the question from the chat, do you see stocks getting worse? It's impossible to know. Is it overvalued historically? Absolutely. We're in a bubble for sure. And the Fed isn't helping by lowering interest rates. I actually think that interest rates need to go higher, and we need to see corrections in a lot of these assets. And a lot of these assets it's going to show up eventually. So it's either we're going to deal with it now, or we're going to kick the can down the road, and we're going to have to really deal with it down the road. I'm the type of person that we need to like rip the Band-Aid off right now and get it solved, and not trying to keep cover everything up and try to, actually heal. So I don't like what the government stance is, which is basically prop everything up forever and not let it correct. But the government needs to decide if they're going to bail out basically the boomers and older, or they're going to let the next generation have an opportunity to have some wealth and build some wealth by owning real estate and owning stocks at a reasonable valuation. And right now, the policy is all favored towards the boomers, from my experience. And this is why, because of course, Congress, the average age of a person in Congress is more than 50 years old. So obviously they're going to represent their own constituents of their own age demographic. I don't think that's, too far-fetched of an idea. It's why we need more young people in politics who have good ideas that can help shape the policy that will help the next generation. I don't think there's many people out there who are looking out for the next generation. I don't think they frankly care, because they'll be dead, to be honest with you. It's a sad fact, but the numbers show us that 12.3 to 15 million plus baby boomers or older will pass away, sadly, in the next decade or so. That real estate's going to come up. A lot of those assets will transfer into nursing homes, retirement communities and stuff like that. And the houses will transfer through the estates, and 70% of them will come on the market and sell. Well, we're going to have a glut of supply at that point in time from all of these baby boomers. So that's really going to impact long term. I also think about AI and in self-driving cars, how that could impact real estate long term. But obviously, when you're buying a piece of real estate, you need to be thinking about in decades, not just in a couple of years, of what's going to happen. So you need to think, what is this a really good spot where I can be with my family for whatever the next 18 years through the school system, and then I'm going to downsize. You need to be really creative and thoughtful, because for most people, this is your largest personal asset that you're ever going to purchase in your life. And do you want to do it at the peak of the market, when, we have so much wealth that's going on between real estate and stocks, and it's starting to all basically correct at the same time? So if stocks fall, ultimately real estate falls. So we could be in a massive bubble popping scenario, right when most elderly people need it, right? So if we have stocks come down and we have real estate come down at the same time, this happened in '08. People who were trying to retire '08, '09, they were totally screwed, because they needed the money at that specific period of time. This is why, wealth managers always say, hey, if you're older, you want to move into bonds, you want to, get in stuff that's not as diverse as stocks, because you can see those rapid swings. And if it swings down at the wrong time, it could be really detrimental. Well, if a lot of the real estate equity gets drawn down, it's going to be really, really painful for this next generation on the way out. So I do think that this will actually happen probably in the next 2 to 3 years, but real estate is a slow going thing. My projections, based on the financial models that I've put together, I used to be a real estate investment banker for a Wall Street company. It shows that we should see prices here in the Sun Belt drop in most areas by 31 to 42%, depending on the amount of new construction the area has and how much inventory the area has. But that's what it needs to get to for it to make financial sense to actually start buying real estate as an investment. And that's probably the reason why I cap it at 42%, is that's when probably hedge funds would come back in and start purchasing, because the numbers would be attractive again to purchase from that type of decline. And we've already seen here a decline of 10%. Now the news will say prices are up. I can tell you that's insane. They're usually using national numbers. The majority of the pain is being felt around new construction communities where there are a lot of FHA and VA buyers. in areas around the Sun Belt where there's a lot of wild speculation from hedge funds, investors, because about 30% of the purchases were from hedge funds. And the other purchases were from boomers that were buying their second and third property as an investment property. So, look, I mean, the lie that we see is that real estate always goes up. It doesn't always go up, obviously, right? I mean, it's not always going up. It has trended upward recently. Why? Because we've had interest rates come down for 30 years, right? And this caused this massive inflation boom across the board. The Fed is manipulating all the assets up. And, my real estate friends get mad at me because I tell them they're just lucky and they got in at the right time. But anybody who purchased, obviously, 2010, 11, 12, et cetera, they got and they didn't sell and they sold in 2023 or whatnot. They crushed it, right? But it wasn't because they were the best operator. It's because they purchased. The vintage year that you purchase is the number one factor to determine how successful you are on your investment or on your real estate purchase. And it's really important to think, like, if you're buying up here, do you have a lot of upside? Probably not. So you really need to be careful on that regard. Now, look at what it was in like what it is in 2022. It's not the same economy as it was. So, a decade ago, the ratio was 3-1. And now, in terms of the price of the home versus the income that you make, right? So now it's 7-1, the price to income ratio. It's like not even the same economy, guys. So I see a lot of people. Sorry, so since 2002, from 2002 to 2022, it has changed so drastically where the first time home buyers are completely priced out, and the first time home buyers are loaded up with the student loans, the credit card loans. I mean, we're seeing repo rates that we've never seen on the car loans. All of these issues are coming across the board that were insanely overvalued from nearly every metric. There's no metric that I've looked at that said, oh, it's a great time to purchase right now historically. And we don't know when things are going to go bad or when they're going to go down or what is going to cause it. But you can look at the fundamentals to say, am I buying it at overpriced or am I buying it underpriced? And obviously you want to buy low and sell high. Right now, you'd be buying high, which I think is a big risk. Next issue that we're seeing is that we're having a ton of layoffs and unemployment that are really hitting the next generation of buyers. So the unemployment rate amongst 20 to 24-year-olds just hit a 10-year high. More Americans were laid off in October than in any other October in 20 years. We think this is going to continue to move forward as the economy becomes more challenging and as AI continues to disrupt industries. I can tell you, even my industry, we use AI and virtual assistants, and it is phenomenal. It makes us wildly more profitable, way more efficient. Our team doesn't take sick days. They're more efficient. All of these type of things. We don't have to pay employment taxes because we're hiring people internationally. It sucks. Like, I see why the companies do it, and I see why it's harder for these younger people to get jobs. And the education system isn't set up to help them because it's still acting in a traditional format. So I feel for them in a big way. We are trying to hire as many people as we can with the profitability that we have, but it is an actual issue. And I think that businesses, their obligation is to make as much profit for their shareholders. They're obviously not going to look out for their employees as much. They are using their employees to make money. That's the only reason why they hire them. And unemployment expectations are near record highs. Look at this. I mean, it's crazy. So people are not optimistic on the economy. If the stock market cracks, this will only get worse. If the boomers aren't selling and buying houses, then basically real estate will come to a halt. And that's what my expectation is. We're already grinding along the bottom, right? So demand is already slowed, especially for existing home sales. You can see that we're basically just as bad as we were in 2008. In 2009, and we could actually see it go a little bit lower. Now, I know there's a lot of people out there like Jan at NAR that's out there saying, oh, next year's going to be better. We're going to see more home sales. We're going to see prices go up. This guy said the same thing in 2007, 2008. I don't even know why anybody listens to this person. Economists are just absolutely a joke. Like, you got to talk to the people on the ground who are doing the business day in, day out. I know they have a big eye view and they sit in their ivory tower, but I talk to people every single day. I think they're probably just living in a bubble and they don't understand what's actually going on in the real world, because you and I both know that things are bad. Things are bad out there. Things are rough. The prices are crazy. It's really hard to save money. How can you have a lot of debt? How can you go out and buy a house and feel good about the economy when all these factors are coming into play? It really doesn't make sense. So, I don't understand the wild optimism. Of course, if you're the leader of an economist of people who sell houses, your job is to pump the market, right? So you see the housing wires try to pump the market. You see the bigger pockets try to pump the market. Oh, it's a great time to get into it. No, it's not a great time. They're just selling their book, right? And you need to understand that everybody is financially motivated to sell you their book. And I think that's a problem. So understand people's motivations before listening to what they have to say. So let's dig into the Q&A. Thank you guys for listening. It's been about 15 minutes just sharing an update of some of the stuff I see. So if for those of you, if this is your first time, I do a live on Fridays. I've got kids and stuff. So I do lives on Fridays between 12:30 and 1:30 is usually when I start them. I messed up today, but I'll do better next time for you guys. And then I do 2 videos that drop, one on Tuesday and one on Thursday. What do? I have the most up-to-date charts out there in the marketplace, and I describe what I see with them, what I see on the ground, and what I project for the future, so you can make the best financial decision for you and your family. Unfiltered, just my honest opinion. I used to be a Wall Street investment banker, as a top real estate agent in my marketplace, as an investor, owned over 200 units, and I own a real estate brokerage, title, mortgage, the whole thing. Like, I'm seeing all of the assets of the business, and I love talking about real estate. So thank you for being here and listening to this. But look, I'm going to go through the charts, the chat, and drop a comment if you have a question on anything that I just shared today. I'm going to go over some of the questions that came up in the comments this week, and then we'll hop off. And of course, I'll post the information next week. So let's see here. California will be a good time to buy. I don't know the California market. It's extremely different than Florida, so I wouldn't be able to tell you about next year. But if you want to reach out to me, shoot me an email. I'll drop my email in the chat. You want to get into touch with somebody who is a top agent, I can get you in touch with a top agent. I know how to interview and find the best in the industry. And right, like 90% of agents are part-time and they're horrible. So just keep that in mind. You need to interview like crazy. I know how to interview them and find you an actual good one. Not somebody who says they're a top agent and then sells 0 homes, which, by the way, is on a lot of Zillow. So just be really careful with that. Again, 90%. This is my business that I am in every single day. I talk to, 20 realtors a day, and most of them are just horrible. They don't understand what's going on. They're not going to be able to guide you. They just want a commission check. There are 10% of them that are phenomenal and worth every cent that you pay them. I know how to get in touch with them. So reach out if you need help. So let's see, a lot of new builds in Riverside County, sitting empty, nearly 2% property tax, massive HOA fee. This makes it so expensive, yet the house prices on new builds look decent. Be really careful on these new builds because they're slashing prices. In Florida specifically, they're slashing prices like crazy. They're giving the rate buy down. It's way better for them to buy down your rate than to slash their price from a financial perspective. But the problem for you, if you have a low rate, it's going to lock you into that house. If you have to sell it in 2 to 3 years, you lose that rate, and your prices are definitely going to be lower on the new builds. They're coming down pretty quickly. Thanks. I enjoy the channel. Number 1 fan, Solomon. Appreciate you. I'm a Gen Xer and can't stomach these prices. I'd like to buy a house in South Carolina, but a house sold for $175 5 years ago and is asking for $400 now. That's right. South Carolina has appreciated quite a bit, and South Carolina's market is actually still moving at these price points. That's where a lot of them had. I had bought a couple properties for 180, 190, and I sold them for 400 or 430, 450 because I thought the prices were insane. It didn't make sense. It's like a starter home, right? It's like a 3-bedroom, 4-bedroom, 2-bath, whatever, 1,600, 2,000 square feet. These houses are completely overpriced, and I think these will correct because the big issue that I honestly see is that the builders are not building in affordable price points. They need to be building in the 250 price point. They just don't make enough margin. It's not worth their time to do it. So they all build luxury, 500 to 700,000 or 400 to 700,000 price point. Now there's just a glut of supply because they got greedy, and then they overbuilt, and then they realized that they don't have enough buyers for the product that they put out there. So if I was nervous and music, you need to get in touch. Again, it depends on the agent that you have because they're going to be able to dissect your market and probably tell you the truth. Most agents won't tell you the truth. They're just there to make a sale. If you need help in South Carolina, I do have some friends who are literally the top agent in the country, is out of South Carolina. So I can get you in touch with them. Depending on where you are, he might be able to assist you. So it just depends. I do think it's better to rent for the majority of people right now if you're in that situation where you missed the boat, because I think that prices will correct and you don't want to be buying this asset at the peak unless you're going to be staying there long term, or the house has some unique compensating factor that this house won't come up again for maybe another 5 to 10 years. So when we want to buy a house we own now, we own one now, 3% interest. When we see prices and interest rates, it doesn't make sense to move. Exactly. Yeah, that's right. Does not make sense. You're experiencing right now the lock-in effect that everybody else is talking about. So we need prices to drop 50%. That was a huge comment. Everybody liked it. I think about 42% would be the max that it would drop from here. If we see that type of drop, just understand that comes with a lot of other consequences. We're going to see a massive stock market drop. You're going to see the economy slow. There's going to be a ton of layoffs. These things don't just happen in a vacuum. You have to understand that when that happens, the entire system basically crumbles, because the majority of consumers' net worth are built in their house. So if they lose all of their net worth, things are going to get dicey. That is why the government continues to push as far as you can go. Rates can go to zero and it still doesn't stop the local property taxes and insurance from bleeding a person to death. Yes, this is exactly right. We are seeing the exact same thing across the board, especially if it's investment property taxes and you're not homesteaded. In Florida, we have a homestead exemption where you can only go up 3% your property taxes every single year. You have to fill the paperwork out, send it to the county. So that does help a little bit, but the insurance costs and flood insurance is making it unbelievable. I mean, it's up like 72% for insurance in the last 5 years. That's not even including health insurance. Don't get me started on that scam. Our health insurance is up 32% year over year for a family of 5, which is just mind boggling. I don't know how the average person honestly lives. If you're spending 40% of your income and it goes straight to your shelter cost, your house or your rent, that's insane. And then you're paying about 25% to the government. That leaves you with a very small amount, 35%. You have to pay for health insurance and food and car, like everything. It doesn't make it, student loan payments. I don't understand how people are living at this point. So it's bleeding a person to death is like a very accurate description of what's happening to the average person in the middle class or the lower class. And by the way, the top 10% are killing it. I can tell you, my friends, they're killing it. They live in a bubble. They have no idea what you guys are going through. They honestly, they don't care. They're like, I got mine, I'm good. Some of them care and they throw down the ladder to the next generation, but they don't really know what it's like to stay up at night and worry about the bills and, oh, my car broke down, I don't have enough money, I need to pick up an extra shift to fix my car. They don't know, and some people are second gen money. It's like the worst for me personally. For most people, I don't like second gen money. I think it's just like the snooty attitude. I like the first gen stuff, where it's like the first person to build wealth in their family. I love those types. It's like they're not dead inside. They have a lot of energy. There's nothing wrong with them either way. It's just something that I've noticed as I've gone to a bunch of events. The government only wants to look after the older generation. The boomers are looking after the boomers. I hope people are starting to see how much our government doesn't care about our future. They are only for the now. So yeah, we have a now mentality. We don't care about the future. We want to get as much for ourselves as we can today. Can you blame them? Everybody is self-interested. So, and I don't think all boomers are the same. There's a lot of boomers that got left behind because they didn't own real estate and they didn't own stock. So I wouldn't even say it's like an age thing. It's just like, did they buy and own or did they not? And if they didn't during this massive run-up period, because we had a zero interest rate policy for a massive period of time, that's really what the difference is. So I don't like to pin it on a specific age demographic. It just happens to be that they were born at a specific time that the economic environment was very favorable because they came through basically a 40-year cycle of lowered interest rates that made assets inflate. So if they had assets that they were able to buy during their lifetime, they became abundantly wealthy. Well, we're not going to, and they had pensions and, et cetera, et cetera. And so we don't have that for the next generation, right? We don't have the pensions. We don't have the guarantees. We probably may not see Social Security unless there's some massive changes that come through to it. So I don't think that they don't care about their future. I think they're fearful of the end of their life and they're trying to hoard as much as possible so they have enough to live the rest of their life comfortably, which I totally understand. I wouldn't. This is also a little victim language to me. So I think like the best thing is you just need to go find a way to make as much money as humanly possible, as soon as humanly possible. I do think it's going to get a little bit more harder in the future to make money as we see the advent of AI come through and people stop working 5 days a week to 3 days a week, et cetera. So I think, the best way to get out of this is to go and get yours as soon as humanly possible so you aren't left behind. And for a lot of people, it's not as easy as it sounds. It's a grind. I mean, for me, it took a decade of grinding 16 hours a day, including weekends, sacrificing my health, sacrificing relationships, sacrificing friends. A lot of people aren't willing to sacrifice. I was willing to sacrifice because now I get to live financially free for the rest of my life. A lot of people aren't willing to do that. That's fine. It's your choice. Just understand, I would rather sacrifice a decade of my life to work my butt off and to be able to live the rest of my life, financially free. And it's worth it to me. That was worth it to me. It's not worth it to everybody. Shout out to the people and myself who can buy homes, but on the sidelines, staying put. Keep holding, y'all. So, I think there's this mentality of the younger generation is like, hey, don't buy, wait. So if they all wait, prices will come down and they'll have the opportunity to come in. I do think waiting and renting is actually the right move. The government will just know this, the government will try to come in and prop up the housing market as much as possible. I don't think they will be successful because the long-term demographics aren't favorable. And the affordability crisis is absolutely real, regardless if they change loan terms or not, to try to make it more accessible, not affordable. Affordable is about cost. Accessible is, can you get the payment? Or like, can we get you access to the loan so you get the payment? But I do think that this mentality is okay and pretty decent. I do think if I did not own a home today, I would actually be renting and staying there for a while. Depends if you want to have a family, though. You don't want to have to get kicked out, but you can always negotiate a long-term lease agreement with your landlord, and it's way easier to negotiate for leases now than it was previously. How long will builders sit on hundreds of thousands of new, finished, unsold homes before they will lower the price? They will wait a long time, folks. They are well capitalized. They still have profit margins. When you look at their info, they still have profit margins of 18 to 20% across the board. They have plenty of margin to hold on to these things, and because they are they now just build a house one by one and not the entire community, they can hold these for quite some time, the way that they finance them. And they have forward commitments. They get access to low cost capital because of their size. They have the economies of scale. So, I mean, they can sit on it for a while before they have to reduce the price. And this is part of the reason, again, why real estate takes so much time. I don't think we're going to see as much builder distress as we saw the last time go around. We are definitely seeing distress, but not as much. They kind of figured it out. So it's going to take more time for prices to come down. I think actually existing homes prices will come down faster than new construction, because the new construction are able to say, hey, we're going to buy down your interest rate. And I think that'll take a little bit more time. So that's all I have for you guys. I'm going to stop sharing. I'm going to go through the comments. If you have questions, now's the time. Definitely let me know what you think of the presentation today. I love when you guys send me comments or emails or whatnot. I respond to every single one. I look at every single one. It means a lot to me that we can communicate here together and start building this think big, question everything community. And I love that. I love doing this with you guys. So let me go through here and see. That'd be great. Thank you for being so honest. You're one of the few honest right now. So many realtors are desperate for any exchange, which I understand, which is hard. Yeah, but I feel for the realtors in some ways, but I also think they got it. If you're a realtor and you got in 2020 or later, you didn't know anything except a hot market. And then you're going from one of the hottest markets ever to a market where we're 15% in closed sales, down 15% in closed sales from 2019 levels, which 2019 was a hard year, to be honest with you. So I feel for them. However, it's really not competitive because most agents are part-time. So all you have to have is an ounce of energy, an ounce of effort, an ounce of passion. Know what a house is about. Attend the inspections. Learn everything that you can learn about a house. Actually provide value to your customers. Do some freaking research, right? The basics it's unbelievable. We teach this at our company. And we really push for producing agents because those are the ones that provide the best service to the community. And the problem is y'all choose the wrong agents. You don't interview. You pick the crappiest person. You pick a friend who sold one house. Come on. It's like, why? Or you just don't care. You think it's not important. But I can tell you, as a top agent in my area, I was saving my customers $30,000-$40,000. And because I did such a good job for them, they would send me more business. Most agents don't even know how to do that. They wouldn't even know where to start because they don't educate themselves. And I understand it's hard. Like, it's hard, But if you're part-time, this shouldn't be a part-time business unless you're really good. The majority of people that I see who are part-time, they're bad. They mess up transactions. They make it harder for both sides of the transaction. They make it harder for their customers. Their egos get in the way. So it's brutal. It's the payment Americans are looking for, not the price. Date the payment, not the rate. Yeah, well, I think people married the rate, because if you saw the last data that came out, so you date the house, you marry the rate, because people can't refinance. They can't refinance. So about like 50% of the refis got denied last month, which was a crazy number that came out. So, these realtors pushed out there that, oh, you're going to be able to refinance your house. That's no problem. And it just couldn't be further from the truth. You have to have multiple things happen. Obviously, prices have to continue to move up if you want to refinance. Otherwise, you got to put money into it. Rates have to go lower. So if those two things don't happen, you're not going to be able to refinance, and you're obviously going to still have to qualify. One of the most annoying things about housing right now, odds that everyone in the media and government has ideas to fix it, but none of them mention stopping bailing out the industry. Yeah, and we have a good point. MTEEE guys, you have great names. So yes, the government will do anything they can to fix the housing market by just basically bailing out the industry. And why is that? Well, of course, if you look at the director of the FHFA, it's Bill Pulte. He's the grandson of Pulte Homes. He's an owner of Pulte Homes. He's a home builder. He's a billionaire home builder. What are they going to do when they get in the government? They're going to make policies to enrich themselves. I mean, this is like common sense. And it doesn't seem to be anybody who cares about that happening. It's no different than Congress insider trading. They all do it. And so the Congress and the government are just grifting as much as humanly possible off of our tax dollars and passing it on to us. So I don't think I'm surprised by any of this. You have to figure out, is the person who's in there a mercenary or a missionary? A mercenary would be somebody who's just going to go out and enrich themselves. And a missionary is somebody who actually cares about the next generation, cares about fixing problems, and wants to get it right. And I can tell you right now, most of the people that I see who are stacked in the government are mercenaries. They're business people. And there's nothing, I actually think business people should be the ones, but they need to be the missionary type, not the mercenary type that are going to be out to enrich themselves. And it's unfortunate. And by the way, I'm talking about both sides of the aisles. Both sides do this. And I think there's a feeling of unfairness amongst the middle and lower classes where we feel like the system's stacked against us. It's because it's true. It's because they are, ripping us off. And I think it's going to be something that the next generation is going to have to deal with. And I think these ideas to fix housing literally does nothing. Like if they come out with a 50-year mortgage, a portable mortgage, an assumable mortgage, that just helps people who already own real estate. That does not help. It does nothing. If they get rid of property tax in Florida, what does that help? That helps owners. That does not help renters or the next generation getting in. Every policy they come out with helps people who already own, and then adds a tax to people who are consumers, which are, 74% of people live paycheck to paycheck. And I hate seeing this. I hate it. It's very upsetting. So I understand what you're saying. Inflation is not going anywhere. The young people need to get over being individuals and work together and grab property. Group economics is the key. Getting creative to find your share of the upside is absolutely important. So even though these are the circumstances on the field, we're all playing by the same circumstances. So we need to step up to the plate and make it happen. And I do think working together is definitely one of the ways to get there. You just get a smaller slice of the pie, but you do need to get creative and put the work in and get yours as soon as possible. I do think it's going to be harder down the line to be able to do that. I dated a couple of realtors here in town during the sale. Okay, we're going to ignore that one. Boomers aren't going to give anything up as they look. The next generation is going to inherit it anyway. Well, I don't. Kevin Berkey, thanks for the comment. The only thing I would comment on that, on the inheritance side, is I think a lot of this money is going to go to the nursing homes, the in-house nurses, the insurance, like all these industries, the hospital networks. I don't know how much money is actually going to transfer. Maybe the top 10% of income earners and wealth holders are going to pass their money down, but the majority of people don't have millions of dollars to pass to the next generation. I think the majority of people aren't going to inherit much at all, and the majority of the money is going to get trapped into the hospital system. Because I can tell you, they can, if you have the right amount of money, you have the right insurance, they can extend your life for a long time in the hospital, keep you in that hospital bed at $7,000 a night and just rack up the money. I mean, it's just how it is. So I think a lot of it's going to go that direction. I have 2 young kids. It's hard not to have FOMO. I have the same job my dad did when I was a kid and get paid more, yet I can't afford half of what he provided for 4 kids. Yeah, that's because the price of everything is 3 to 4 times higher. So Look, my connection, it says that it's unstable. So look, thank you guys for listening. Store Sky, thanks for sharing. UPS driver, by the way. Yeah, hopefully, I see a lot of layoffs in Amazon and UPS and FedEx and all those companies. So, um, you know, I hope you hang in there. But yeah, it is really tough if you're living paycheck to paycheck and your wage isn't as much as high as it should be. So I did an analysis for the last decade. Prices of houses are up 100% over the last decade. Wages are up 25 to 30%. And that is the number one. Like, if we really break it down, housing being so unaffordable is one of the number one issues that impacts every American, because it takes such a chunk of your paycheck. You can't do anything else. Like, it paralyzes your financials. So hang in there, guys. Find your way to get your share of ownership, but you need to be really careful to buy right now. And in some cases, it's best to rent. Love you guys. We'll be on Tuesday and Thursday next week. Of course, you can subscribe to my Substack newsletter. I've got 27,000 followers on there. I put out notes about what I think about the market, what's going on. So if you want to read that, let me know. If you're looking for a top realtor around the country, let me know. I'm happy to connect you with one of the best. Again, most suck. So if you need a good one, reach out to me. You can always email me, and I appreciate you. If you have any specific questions, shoot me an email as well. See you later, guys. Have a great weekend.